What's up guys, welcome back to another video. Purpose of today's video, we're going to run through the harmonic crab formation. So go over to my website ottrades.com and the drop down tab here for the patterns. We've got all of the advanced patterns, all of the harmonic patterns, and today we're going to run through the harmonic crab. Obviously OT software here identifies all of these patterns for you, so you don't need to run through any of this information here, just identify the pattern for you. But today we're going to run through the harmonic crab pattern. So down to the trade setup, we've got the ratios here to look for to create the pattern, and obviously the trade management stuff at the bottom here. So to get started, like all patterns, start with the initial X to A leg here. This is just an initial price swing. Can be to the upside or the downside, bullish or bearish. This price swing determines the direction of the reversal we will be looking for. So in this instance, the X to A leg is bullish, therefore we will eventually be looking for a bullish reversal at the D point. So there's our initial price swing here, X to A point. Now the second point, the B point, this is going to be the first point in the pattern that we will look for Fibonacci retracement. So the market forms a B point by fulfilling at least a 382 retracement, and then either a precise 382, precise 50%, or precise 61.8% retracement of the X to A leg. Now it says here the term precise means that it is closer to one Fibonacci level than the other. For example, if the retracement is 1 pip less than 44.1%, which is halfway between 382 and 50%, then it's treated as 382%. If it's 1 pip more, then it's treated as 50%. So the term precise doesn't actually mean it hits the 382, 50%, or 618% exactly, or precisely. It actually means it's just 1 pip closer to this level than it is to the one higher or lower than it. So let's run through an example here. So we're looking at a retracement of the X to A leg. So it says it can be either a precise 382, a precise 50%, or a precise 618. So for this example, we're going to use the 50%. So we're going to use a precise 50%. Now again, this doesn't mean it hits the 50% level exactly, but I'm just going to leave it here just as an example. So for 50%, we need price to fall within halfway of the 382 and halfway of the 618 here. So price has to fall within this green box here. So halfway between the 382 and 50% level is, it mentions up here, is 44.1%. So let's put this on here just so you can visualize it. Where are we? 44.1, I'll do it up here. 44.1%. And I'll find halfway between the 50%. So I'm just doing it on calculator. Point 5.9. So price has got to fall within this green box here, so not a bad guess from my green boxes, but this is the exact midway points between the 50% 382 level. The exact halfway point is 44.1%, and between the 50% level and the 618 level, the exact halfway point is 55.9%. So long as price enters this green box and does not exceed the bottom of this green box, this is classed as a precise 50% retracement of that X to A leg. So if we fall 1 pip below this blue line, the halfway point between 382 and 50%, We're 1 pip closer to the 50% level than we are to the 382 level. Therefore, it's a precise 50%. If price remains 1 pip higher than this grey line, the 55.9% level, we're 1 pip closer to the 50% than we are to the 618. Therefore, it's a precise 50%. Now, the reverse is also true. So if it exceeds this grey line by 1 pip, so it exceeds the 55.9% level by 1 pip, we're now closer to the 618 level by 1 pip than we are to the 50%. Therefore, it's a precise 618. So I hope that makes sense, guys. So just as a visual example there, so price has basically got to stay within this green box for it to be a precise 50% retracement. Now, you might have seen there that it says it's got to either form a precise 382, a precise 50, or a precise 618. So for the purpose of the B point, it's got to basically form within these three levels here, but that is for the D point. That's going to determine the D point. So the D point is going to be calculated differently based on whether it's precise 382, precise 50, or precise 618 level. Now we'll obviously come to that when we get to the D point, but just to bear that in mind. So next, so here it says the B point is valid if it lies between 382 and 1 pip less than that 70.2. So that 70.2 is obviously the halfway point between the 618 and 786. So if it's less than the 70.2 or higher than that 70.2 level, it remains a precise 618. If it extends past that, it's now a precise 78.6. Therefore, the pattern is invalid. So the B point is valid as long as it lies between a 382 and 1 pip less than 70.2 of XA. That takes into account all three of these precise retracement levels. There it goes. It says depends on the determines the D point. So moving on to the C point. Just label this up as B. So the C point is a relatively easy one to determine. C point is valid if it touches at least a 382 retracement of AB and does not exceed A or 100%. Again, this is pretty common for most patterns to be set at this level, 382, and not exceed 100%. So all that means is it's got to form at least from the 382 and cannot exceed a 100%. So the price has got to come within, let's get rid of these to make it a bit more clear, within this green box here. So price is going to retrace from B. It's going to exceed the 382. Now price can exceed that 382 just by the wick. So the wick of the candle can come up through the 382 and then price can collapse back down and close below that 382. So long as the price itself, the wick, has exceeded that, and even if it closes below it and continues lower, that wick has exceeded the 382 level, therefore the pattern is still valid. This is not the same up here. If the wick exceeds that A point or 100% retracement level, if the wick exceeds that, price has moved through this level, and therefore it's invalid. Even if price exceeds this and the candle closes back below it, that is still an invalid pattern now, and we shouldn't take that into consideration. So I'm just going to put this at the 786 level, just as an example here. Move it across a bit. I'm just going to put this as a 786 level. Price can form, the C point can form anywhere within this green box here. So I hope that makes sense. Now moving on to the most complicated part of the pattern is the D point, also known as the PRZ, the potential reversal zone. So unlike the advanced patterns, the D point is actually formed up of three Fibonacci retracement or extension levels. This is then called the potential reversal zone, so a zone we're looking for the reversal to happen in, or PRZ. So it's calculated as a combination of three different extension levels. Now this is where our precise 382, precise 50%, or precise 61.8% of that X to A leg for the B point, this initial Fibonacci setup here. This is where these three factors come into play. So the D point or the PRZ is going to be different depending on the B point, whether it was a 382, a 50, or a 618 retracement of XA. So ours was a 50%. Let's just double check that here. Yep, so our B point formed at 50%. So we're just going to use the 50% as an example here. So we can skip this if the B point is formed at the precise 382. This is how the PRZ is calculated. But we want this bit here. If the B point is formed at a precise 50% retracement of X to A, then the PRZ is calculated as 1618 extension of X to A. So that's going to be our first zone, first point of our potential reversal zone. 1618 extension of X to A leg. So we've got our X to A leg, and we've got the 161.8% extension here. So I'm just going to draw a line here at that point. As you can see, the D point or the PRZ is quite a deep extension of, it's quite a distance away from the rest of the pattern, and that's common for crab patterns. All of the crab patterns have a D point significantly further away from the rest of the pattern. It's quite a large or violent swing down to form that final point of these crab patterns here. So moving on to the next one. The next point of the PRZ is formed at the 2.24 AB equals CD movement. So measuring the 224% of the A to B leg, use this measurement as a length or number of pips to travel from the C point. So that is quite confusing to understand. So 2.24, so 224% of the A to B leg move measured from the C point essentially. So if we do the A to B extension, A to B extension, and then it was a 224% move. So which one am I going to alter? Let's do this. 224% move, get rid of that 1618. So 224% move. I'm just going to copy this across. So that's 200, which is 2 of these A to B leg, plus 24% of one of the legs. So 224% move of that A to B leg. However, this needs to be measured from the C point. So if I draw a line across here at the A point, this is the top of our extension tool that we've used, and drag that across now. I can delete these ones. So this is still the same distance as that A to B leg. This is 100% or an exact copy of the A to B leg. But however, it's now measured from the C point. So this is 224% move of that A to B leg measured from the C point. So this forms our second point of our potential reversal zone. 224% of the A to B moved measured as C to D, or measured from the C point. Hope that makes sense, guys. And finally, depending on the C point, whether it's a precise, again, precise does not mean exact 382, it means 1 pip closer to the 382 than it is to the 50%. For 382, because it's the minimum fib level, it needs to at least hit the 382 and then cannot exceed the midway point between 382 or 50%. Again, precise 50% will actually mean 1 pip closer to 50% than it is to the 382 or 618. And so on and so forth. Ours, I believe I put as the 786. So the C was, yep, a precise 786 retracement of the A to B leg. That's what all of these are. So the final point of the PRZ, so the final D point, is determined by where that C point came in relation to the A to B. So determined by where we our C point landed, so it could land anywhere between 382 and 100%, if you remember. So dependent on where that C point formed, if it formed here or if it formed all the way at the top here, is going to depend on what BC extension you're going to use to work out your final PRZ point. Now ours was a precise 786, therefore we're going to use the 261.8% extension of B to C. So starting from C to B and back up to C. This is our extension tool. And we want 261.8, 2618 of the BC if the C point is precise 68.6, 78.6. Therefore, this is the final point of our potential reversal zone. Here to here. I know it's not straight. There to there. So that's the final point of our PRZ. So if I join all of these levels up, this is our zone that we're looking for buying opportunities. So put this down to here, this is our D point. As you can see, it's a large extension down to this D point, or the PRZ. It's quite a distance away from the rest of the pattern. Just join this up so you can see what the pattern actually looks like. There. So this is our crab pattern. This is our harmonic crab pattern. So again, with harmonic patterns, the D point isn't actually a point in time like they are with the advanced patterns. You're actually looking at a potential reversal zone. So as it quite clearly states, a potential reversal zone is an area you're looking for potential reversals to occur in. So as price moves from this C point down, as soon as it enters this zone, you can start to look for candlestick formations or other reasons to enter the trade based on your back testing. Conventionally, you would look for candlestick formations to enter a reversal, so a bullish opportunity here. So you're looking for price to move higher from this zone. Like I said, conventionally, these are going to be based on candlestick formations, but you could backtest it to base it on, I don't know, stochastic, MACD, RSI. You could trade double bottoms, triple bottoms, whatever it might be, head and shoulders, something like that. So long as it's within this potential reversal zone, that would be the conventional way to trade this pattern. So yeah, you're looking for reversals within this zone, and for price to obviously move higher. Now the stops are the 213 extension of X to A. So let's just put them in as well. X to A. There. And we're looking at 213. Okay, so this is our stop loss down here. At the 213 of XA. So this is our stop loss. Now, although I said just now that this is our potential reversal zone, or the PRZ, our stop loss is technically the invalidation level for these patterns. So this is the point at which we're going to get out of the trade at a loss, because if price exceeds this level, we're expecting the price to continue lower. So if price hits this level, this is our invalidation point. Therefore, we were wrong about the pattern. It's not going to reverse. Therefore, we need to just get out of the trade, cut our losses, and get out. So technically, this is the invalidation point for the pattern. So if price continues to move, lower, if it goes straight through this potential reversal zone and actually continues to move lower towards our stop loss, that doesn't mean we can't still look for reasons to enter a trade based on this pattern, because the pattern's technically not been invalidated. This stop loss level is there for a reason. This is where we're saying the pattern's no longer going to work. Above this point, we haven't said anything. This pattern's still valid above this point. If anything, it's a better area to get into because it lowers the increases the risk to reward ratio. So you're risking less to make more. Does that make sense? Because the distance to your stop loss is decreasing, so you're risking less in terms of pips wise. It's up to you, depending on your risk management, whether you risk less account equity or whatever you want to call it per trade if it moves lower. But in terms of pips, you're risking less pips to your stop loss than you are if it's up here to make this more pips, essentially based on the targets, which we'll put in now. So targets 382 and 618 of the A to D leg, like they are with most patterns. So stretch our fib retracement tool from A down to D. So our initial targets are the 382 and 618 of A to D. So if price retraces from our D point, if price retraces and hits 382, we're going to close half of the position at this point. I'll move our stops up to break even. So at this point now, we've closed half of our position in profit, so we've taken some profits off the table. At this point, it's a risk-free trade because price can either only move back down and stop us out at zero, so we've just retained that profit we've taken at 382, and the rest of the position's gone to zero. We haven't lost anything. Or otherwise, it could continue higher and hit our second targets at the 618 level. So we're either going to make more money or lose nothing. So that's how you should conventionally manage the trade. However, obviously you need to remember, if price continues lower from this D point, even if you get an entry reason within this PRZ, if you get an entry reason within the PRZ, you're gonna you need to remember, if price continues lower after you've entered the trade, you must restretch your Fibonacci retracement level down to the price extreme, so the lowest point the price gets to. Even if this goes all the way down and eventually hits your stop loss, you need to continue to stretch your Fibonacci retracement tool down with the price, because the Fibonacci retracement tool takes into account the entire price swing. It doesn't care where you've got into the market. It doesn't care about anything to do with you. All it cares about is the market and what the market is doing. So if the price continues lower, you need to stretch your Fibonacci retracement tool to take into consideration the entire price swing. Hope that makes sense. So again, going back to our original point of getting in below that PRZ, if price just moves straight through the PRZ and gives us an entry reason down here, you can obviously see now the distance to our stop loss has decreased from, sorry, wrong one. Distance to our stop loss has decreased from the bottom of the PRZ. It was originally called at 60 pips. There, 59.7, so call it 60 pips. If we now enter in the trade around this level, it's now at 25 pips, so it's less than it's more than halved our distance to the stop loss. But we're looking at making 84.8 pips on the first target. So you're looking at well over 3-to-1 risk to reward ratio there. So risking 25 pips to make 85 pips, call it. Whereas initially we would have been risking, so that was a 3-to-1 risk to reward. Whereas initially we're looking at 60 pips to make 70 pips, so just over a 1-to-1. Whereas now entering down here, we're looking at a 3-to-1 risk to reward. So risking £100 to make £300, rather than risking £100 to make £110 or whatever it might be. I hope that makes sense. So that's the risk management techniques. That's where the stop loss goes, the take profit target goes, and how to manage the trade once you're in that trade. Again, with the harmonic patterns, with advanced patterns, it's limit orders. With harmonic patterns, you tend to wait for confirmation, usually based on candlestick formations, which you can find on my website, or based on an indicator, which again is on my website. So yeah, usually look for the entry reasons based on certain confirmation, which might be below the actual PRZ. Like I said, the pattern's not technically not completed until it hits the bottom of the PRZ anyway at that D point. So why not just wait for a better risk to reward if you're a more risk depending on your risk appetite for risk, whatever. If you're more conservative, you might wait for an opportunity to occur lower down. Obviously, if you're going to do that all the time, then you might miss opportunities higher up. So you might take less trades, but you're being more conservative. Therefore, your trades are less risky in theory. So yeah, that's the harmonic crab pattern. Any questions, leave me a message on my website here. Send me a message if you've got any questions on that. I hope this was informative. I hope you enjoyed the video. Thank you very much for watching. Cheers, ta-da.